There really is only one strategy that you need in order to be profitable in trading. And I'm going to reveal the one strategy that I love to use that is quickly becoming the only thing that I trade. What's up, everybody? This is Josh E-Red, and today's trading session is actually something new I want to try on my channel. Those who've been kind of sticking around, you've seen it evolve from photography and video, a lot of stuff that I love. I just love content creation. And the newest thing that I've been really leaning into is just music that I do. I just love doing music for fun. So you've probably seen music tracks on the channel. Love your support for anybody who is jumping into the channel and seeing the wide eclectic array of videos that we have here. But the new thing that I want to start evolving my channel into is really helping other people become profitable at trading. Trading is something that I've been jumping into since COVID in 2020. Had some really cool gains, had some losses, and I am learning just alongside the rest of you. And so I want to share those learnings on this channel. And so hopefully you find some value. If you do, definitely hit that like button and give that subscribe button a nice pound. But there is really a consolidated niche that I want to focus on with respect to trading on this channel. The consolidated niche is focused on two primary strategies off two primary key levels. Those are the only entry points that you do. And I'm speaking of day trading for everybody who's joining for the first time. Not looking at longs for an extended period of time. I'm really curious about the day trading market. Ever since I've started following some of the other YouTubers who have jumped in the day trading market, one of my favorite ones, big hat tip to him, is Scarface Trades. Go check him out. Give him a sub. And there's others that I've been learning so much from, and I want to translate a lot of that over. But what has become quickly my favorite strategy is the break and retest, or the reversal strategy off pre-market highs and lows. I'm not going to get into drawing out key levels. We'll get into that in some other videos. But for this first video, I just want to break down how frequent you see this strategy work out. And you literally can take trades every single day. So without further ado, let's jump into a quick screen share presentation. So what you're seeing here is my Webull trader. Now, for what it's worth, I'm talking about specifically trading options contracts here. I'm not talking about futures, though we can get into that downstream, but trading options contracts specifically. I use Webull as my broker. I've quickly become to love Webull and their technical trading platform and the technicals that you can do and drawing out on key levels. And it's just so easy to use, and the mobile app's really user-friendly. So basically, there are only these tickers on the side that I focus on trading. SPY and QQQ, SPY following the S&P 500, QQQ following the NASDAQ. And these two are really the primaries of what I trade. And it's really important that you trade 1, 2, 3, 4 tickers, or really only focus on a very small subset of tickers, just so you learn the character of the stock. It moves in a certain way, it behaves in a certain way, depending on the different key levels that you're tracking. And so the more you know how a particular stock moves, the easier it is to anticipate those moves and to be able to ultimately become profitable. But sticking to one trading strategy is one of the key things I've seen consistently profitable traders stick to. The strategy I am committing myself to sticking to for the next 12 months at a minimum is simply the break and retest strategy, or the reversal strategy off of pre-market highs and pre-market lows. Before I jump into moving to higher time frames, I'll usually jump into the 4-hour, the 1 hour, I'll jump into the daily time frame, and I'll draw out key levels. I color code all my key levels. So a purple key level is going to be a 4-hour time frame. A red key level is going to be on the 1 hour time frame, just so I have an idea of where potential profit targets or stop losses might be. But then intraday, what I end up doing prior to market open is my gold lines here. I mark out pre-market high and pre-market low. And these green lines are prior day high, prior day low. But my entries, I usually take off of the pre-market high and pre-market low. And what I'm ultimately looking for is a 1-to-2 risk to reward ratio on any trade I take. So basically, I'm looking for exactly what it did on SPY this morning, where it pulled all the way back in the pre-market. Here was our pre-market low, started to pull up, and then we had a really big bearish candle pulling us below the pre-market low. But rather than continue the downside and then come back up for a retest, which would have been a break and retest strategy, we had a bit of a fake out here. And then we ultimately were met by two bullish bars here, which ultimately engulfed all of this red candle here, this bearish candle here. So this would have been a really good entry to take off of this pre-market low to be able to take a trade to the upside. Now, again, I'm looking for a 1-to-2. So if we saw these two green bars get put in, we are now officially back above the pre-market low. We could have rejected further to the downside after this green because it came back up and tested it. And if this was a red bar to the downside play would have been the one to take because it broke, retested, and then traded at the downside. And then what we're ultimately looking for here, though, is a trade to the upside. So we put our profit target here at 1 to 2. This would be the first place you take. I'm trading on a small account, so I'm going to be taking, 1 to 2 option contracts per trade as I continue to build out the strategy. But I would take basically my first take profit would be at that 1 to 2 mark, and then I'd leave a runner in and see what happens. And sometimes, I don't see this all the time, but as I've been mapping these trades and back testing them, there are a fair amount of times where it actually ends up retracing the pre-market high. I find the wider the gap between the pre-market high and pre-market low, the less likely it is going to actually trace all the way up. So something to keep in mind as you're setting your profit targets, but taking profits along the way is something that is wildly important as you're doing this. Now, this would have been a winner here. And then as you continue to see it, it broke above that pre-market high. So the trade here would have been, let's wait and see if it comes back and retests that pre-market high and see if there's a nice 1 to 2 risk reward that we can jump in the trade here. What you end up seeing here is it comes down. We see price went all the way down here just below the pre-market high, and then pulled all the way back up and ended right here at the top of this green body. And then this next candle, we ended up trying to push back down again, but then price got brought all the way back up here. Again, this was a great entry candle. These wicks are showing weakness on the selling side. So we jump in this trade, and this one ultimately gave us the stop loss just below the break of structure here on the pre-market high. And this one ultimately was a 1 to 3 risk to reward ratio. You would have hit that 1 to 2 within literally 3 minutes of the trade. So this was a great opportunity to get in and out really quick. And then obviously it was met with some strong rejection on the downside. Now, the great part about this strategy is you can literally trade it on any of these tickers, and you can trade it on other tickers as well because it is so consistent. And I'm tracking and back testing on all of these tickers I have on the left here. I have some of the big tech stocks that are pretty volatile and move pretty frequently. NVDA, AMD, Microsoft, Apple, and Tesla, alongside the QQQ and the SPY. But what you saw here is a good example of a losing trade that we actually took, because again, not all trading strategies are officially effective and successful. So what we saw was that nice bearish candle here, saw some indecision here. We saw it pull back up to this candle here, and then we saw it come all the way up here, wick against this pre-market low, and then pull price all the way down here. I took that as an entry point, as a break and retest. And of course, this trade did not work out, but it was a good setup and one that I would probably take again. But not all trades are going to work out. So it's important that you are trading for the setup that you're ultimately looking for, which for me is a break and retest of the pre-market high or low, or a reversal of the pre-market high or low. Another good example of this where it panned out today was on Apple. We saw this pre-market low get put in. We pulled price up here. We saw this really big bearish candle rejection. Price tried to go back above it, couldn't break the structure. And then we saw another big bearish candle. So we broke below this, and I was waiting for a retest and then a rejection. So a break and retest. Saw the break below. We saw a retest here, and we saw price get pushed down here. This would have been a really good rejection candle. I ended up waiting for this candle here to wick here and pull price down here, entered on that candle, and then we saw a really nice 1 to 2 risk to reward, and this would have pulled all the way down to a 1 to 3 risk to reward ultimately. So here you have it. That's what I want to share with you all on this channel with respect to trading. So if there's anything that's trading related on this channel, I want to keep it super focused, super niche, options trading on the Qs, on the SPY, and ultimately make sure that we're building the discipline around the break and retest strategy and the reversal strategy. What I have found time and time again, it's not about the number of strategies, the number of indicators you have, really understanding price action, what it does on the chart, and ultimately sticking to one strategy that you can see over and over and over again and be able to gauge and build data around the success rates, the win rates, the loss rates, so you can properly manage your risk. So if this is helpful and you want to see more of this, definitely hit the like button and give that subscribe button a nice pound. Drop some comments down below. But my hope is to continue to bring to you some more of this so you can see it again and again and again and see how well this particular strategy works out so you too can become even more profitable in your trading. Thanks, everybody. Until the next one, we'll talk to you soon.